So this is a really, really important topic, right? I mean, so a couple of key things. When you think about how is vol going to perform in a market event as markets are falling, a couple key things. One, there's like the speed of the event, right? And a lot of people don't think about this. They just think about, oh, the S&P is down 10%. How much is vol going to go up? But it's like, if that's 10% is in one day, or in 1 hour, or in 10 minutes, that's going to make vol spike like crazy, right? Because the value of convexity of like rehedging your delta and your gamma on the move like that is really high. If that 10% is a slow bleed down over a month or two, vol might barely even rise, right? It might start to rise at first and then kind of fade, because underlying like the value of volatility again is in that realized volatility, how much money that a dynamic hedger can capture as they're rehedging. And so, you get like a 22 style sell-off, right, where the market was down very significantly over the course of that year. But vol kind of tried to rally, in the early parts of the year and then just faded and didn't perform, right? Because you got that like slow, choppy grind down. So that's really, really important. And then related to that is, positioning, right? And that positioning drives a lot of like the speed of moves down. But, if the market is pretty well hedged, if, the buy side isn't overextended, long levered, if market makers aren't too short gamma, like it's really hard to get that really heavy, significant vol performance to the upside. You really get that huge vol performance when everybody's over levered, everybody's bullish, everybody's crazy, people are selling vol like nuts, and then they're scrambling to cover, they're getting blown out. Like that's when you get that vol event.
Supply and demand, right?
Supply and demand.
It's funny how you can get into all the, quantitative kind of details and Greeks. But at the end of the day, supply and demand
100%.
is the most important thing, and particularly in a convex instrument like an option, I think.